Yeah, Bradford Canvas Mortgage Minute. Hey, variable, fixed, what to do? I mean, it's a perplexing question for a lot of folks. And really, you have to look at your lifestyle, look at the different factors. So let's take a brief look at where one would make sense for versus the other. Now, obviously, as you know, the fixed rate mortgages are, well, they're fixed rates. So you've got a lot of security for a length of time, and that time can be anywhere from 6 months up to 10 years. That's right, we have mortgages that are available for up to 10 years with guaranteed rates. So for some people who are very, security sensitive, or they just don't like a lot of risk, they just want to have a lot of certainty in their lives, this might be an excellent product and an excellent option. Especially, like I said, the 5-year rates are still fantastic deals. We're still talking historic low rates, and that 10-year product's amazing, and we've got a bunch of products in between. We've got a 6-year, a 7-year, so lots of different options. So that would be kind of one of the advantages of the fixed rate mortgage. Variable, on the other hand, has a little bit of risk with it. That's right. How the variable rate mortgages work is you get a discount off the prime Bank of Canada rate. So the prime rate right now is sitting at 3%. Now, variable discounts vary depending on the different lenders we use, and not all lenders will qualify all clients in all situations. How good are some of these deals? Well, I have a lender right now who's offering a prime minus 55. So that means that you could have a variable rate mortgage at 2.45%, which is an amazing deal. However, this lender is very stringent, and again, not everybody qualifies for this product. There's a lot of different criteria. Another thing a lot of folks need to be aware of is when you're getting a variable rate mortgage, you have to qualify on the Bank of Canada rate. So what does that mean to you? Well, right now the Bank of Canada rate is 5.34%. So even though you're getting a mortgage at, let's just say this, the one that had the prime minus 55, even though you're getting a mortgage at 2.45%, I have to qualify you in the 5.34. Now that makes a tremendous difference. So a lot of times folks are going, well, wait a minute, I qualify on this fixed rate 5-year mortgage. How come I can't get this variable? Well, it's because I have to qualify you in that higher rate. The ratios sometimes don't work. And ergo, we don't wind up with folks who get variable rate mortgages. So the government's thinking in all of this, and why they implemented it this way, is they felt that because variable rate mortgages have inherent risk with the prime rate fluctuating, that there should be some certainty, and the people who should be able to handle it should be people who could withstand an increase in interest rates going up. Now, as far as the Bank of Canada rate and being set, the Bank of Canada meets every quarter. So the likelihood of your rate going up is going to happen usually on a quarterly basis if it does. Now, typically what we found, the Bank of Canada really hasn't changed much for the last almost 2.5, 3 years. The rate's been holding pretty steady. And again, like I said, that magic number right now is 3%. So that is the advantages of the variable, where you can certainly have that huge savings because the interest rate's a lot lower. We have a couple of strategies for folks who are more looking for payment protection even with a variable. We again have some great strategies to help you do that as well. The other thing to keep in mind with mortgages, especially when you're looking at a term under 5 years, under the new Bank of Canada rules, we have to qualify a lot of folks, especially in the high ratio situation. In other words, when you have less than 20% down and you want a term shorter than 5 years, you've got to use that Canada benchmark rate once again. Again, so that's why sometimes I get people who get frustrated and go, well, how come I can't qualify for this 3-year or this 2-year? Same reason, because I have to use this Bank of Canada rate. I cannot use the actual mortgage rate. The situation where there's an exception is when you have a conventional mortgage with 20% at least down. But again, not all lenders follow the same policy. Some of the lenders, even conventionally, if your term is less than 5 years or you're getting a variable, you're still qualifying on a different type of rate. All this might sound a little confusing to you, and some days, believe you me, it's a little confusing to us. There's so many options, so many different ways of doing things. That's why we encourage you, give us a shout, let us work through your individual situation to see if the fixed is going to work, the variable is going to work, what term's going to work, whatever. That's what we're here to do at the Auxilium team. As I keep telling you over and over, the name simply means to aid, assist, care, and support, and that's what we do here. So, need a mortgage? Wanting those options? Give us a shout. It's Cam the Mortgage Man. We look forward to helping you. Any questions related to fixed, variable, whatever they may be, we're here to help. Give us a shout.